calculation very simply. There's a reason why all moves, almost all moves will start. I don't want to say all moves, obviously, because that's not the way it is. Most moves will start if they're going to run the market down. And this is a very simplistic overview. Understand that this is not a basic, or this is, as we look at this and we see, in this example, there's a reason why the market broke above that previous high, and that's where the market started to work down from. So how it manifests itself on the screen, Andy, is you will see the break above the major level. And again, it's important to pick the proper high probability points. So when we come into a proper high probability point, we see the market break above it and then quickly get rejected back down below. That has given us a very good indication that the stops were taken above that point. It's the same way as we go when we scroll forward. The second or deeper high probability point we had talked about for Friday. So the second point that we were talking about in the daily market review was 1.6100. Now, why did we mention 1.6100? Well, it was a point of confluence. I'm not going to get into every part to that, but that was the high probability point we marked. So when the market comes into that level and we see them break below that and very quickly get rejected back up above it, that gives us a good indication that stops were taken. So there's one thing that we know. If they are, you got to ask yourself, what type of order is below any support point? You have really, while there's many types of orders, in general, you have two main types of orders. In this case, you're going to have the stop loss for anybody that's long. And the second type of order is you're going to have those that are looking to sell on the break of that level. Therefore, that's telling you that below any support point, you have a massing of sell orders. So if you see them run into those sell orders and immediately buy up all those sell orders, quickly get rejected back up above it, that's giving you a very good indication that they were buying into the selling pressure. If they were buying into the selling pressure, then that gives you the direction. That's telling you that they are looking to accumulate that long position. It's just the exact opposite for what we talked about back here. So again, letting the chart catch up, and we look at it from the opposite perspective. Above any resistance point, what do we have? We have the stop loss for anybody that is short. In addition to, which, what is the stop loss if you're short? That's a buy position. You have to buy it back. So the flip side to that is those that are looking to buy on the break of that level. So you have a massing of buy orders in general above most resistance points, and you have a massing of sell orders below most support points. So in this example, when they run the market into those buy orders and immediately reject the market out, that's showing you that they were, as soon as they ran into the buy orders, they were selling into the buying pressure, and the ensuing price action confirmed that. To the overall high, you're talking 330 pips. So this move is so far outside of what normal is that more than likely come Sunday, we're not really going to be paying too much attention to market cycle until things normalize on the euro. More or less on the euro come Sunday, we're going to be looking at high probability points and trading them without too much directional bias based on cycle. June asks, why do you teach your strategy? Well, we have such, and this is something I think any of the members in here hopefully would speak to. We have such a good community of traders that Chad and I find a lot of joy in finding people that are successful or creating successful traders. There's a trader maybe a day or it might have been a week ago, that posted his track record of his trades, and finally, after years of failing, has become a successful trader. And there's a certain amount of joy in doing that. To be quite honest with you, I was burning out bad with just the live room. I didn't find as much joy in it because I didn't think people had I didn't see the success in people that I was looking for. Now with the format of allowing people to not become reliant on us, after you start seeing that much success in people, there's a huge joy in that. And there's also, trading is a relatively boring business. So when you can have a very large community of traders, and you can come into the room on Tuesdays and Thursdays, chat with people, you can go in the forum, talk with people, you know, there's a certain portion of that, and everybody understands this, that trades for a living or is looking to trade for a living. Having other traders around you is a big part of it. So whether I taught it or not, I would be involved in some community somewhere. And it's just a bonus to see people that are, you know, possibly failing for years or knew nothing about the market that are finally finding success. Hammond, the one of the most accurate things I have as far as, you know, I don't have my live account attached to a track record. There's a few reasons for that, and we posted, one of the things we posted was a portion of Chad's track record. Now this was, quite honestly, is one of the as far as win-loss goes, it was actually one of the lower win-loss times of his track record. We posted it for a reason. We explained that more in the article that's associated with. When we look at, you know, when you look at the perspective of creating a trader that has their own slight twist to it, what we try and do is in the daily market reviews, we try and give essentially the closest thing to a preemptive signal as we want to give. Now, we still want traders to pull the trigger for themselves, because if they're not pulling triggers for themselves, they're not going to learn. So what we do, so people can see that this stuff works in advance, is that we're giving them expected direction for the following day as well as exact price points. So that's what we do for showing in advance how it works, how it, you know, and that, I guess not just how it works, but also giving somebody a very good overview of exactly what they should be looking for that day. Yeah, it's Sunday, the market is closed. If you're looking at that video, below each one of those videos, somebody's asking for a link to the third video. You guys, I'm telling you, you know, one of the things I urge people to do, I know people get kind of, I don't want to use the word lazy about it, but click on Forex videos at the top, go through every section of the site. Now, I say that because there's many other things layered in there. So in order to find that video, you want to click through those videos. At the bottom of it, you're going to see a link to it. I just want people to start looking through it, because there's a lot more that people sometimes don't realize when they just get a link. But there's a ton of information on there. There's many recent trades that we have, and so I just want people to become fairly proficient at looking through the site. Hopefully that makes sense. Can you detect a move there is not a stop run? Tim, no, we don't. I do not look to trade unless there is a manipulation there. So Tim's question was, can you detect a move there is not a stop run, or I'll interject, manipulation? And the answer is no. You can detect it based on cycle direction right, or the market. I don't want to say it like that. I'll say it like the banks follow through on the cycle, but they do not show the manipulation. Those are days where we don't get a trade. I use MB trading, Patrick. Some people don't like them. I have always found good success with them. I don't, you know, I don't, one of the things with MB trading is that they don't trade against you. They do pocket the spread. They do deal customer versus customer on small amounts, but they've always been a good broker to me. So that's who I like. I do not recommend brokers, because the second I recommend somebody, they're going to screw you, and then I'm going to feel horrible. So I'll just simply tell you who I've used. And question is it wrong to buy the euro dollar in a one spot 33.40, one spot 33.50 range, hoping it would go in an uptrend? It's very important to understand we have a specific criteria for what we look for. If the market cycle is not clear, if the high probability points are not clear, we do not look to take a trade. So one of the most difficult things I have to break with traders is their urge to trade no matter what. The urge to say, I'm going to be in a trade regardless. And that is half the battle with what Chad and I do. When we're working with a member to help them get to the point where they're very selective about the trades, what we do is we hammer home, is that satisfying the criteria? And so that's what I would urge people to do is it's either satisfying the criteria for identifying what the banks are doing or not. If it's not, then very simply, we do not look to take a trade. So what I would say there is number one, you use the word hope, which as a trader we don't ever want to use, but especially in regards to the euro, until the cycle is clear, it's probably going to be a pair that I would avoid. William asks, where is exactly the entry price after confirmation of the manipulation? Well, let's go back to the pound and we'll talk about a trade that was a trade a fair bit of the members caught. Now, and just to be fair to this one, I wasn't around during this time. I don't Monday morning quarterback things. If I wasn't around, if I didn't do it live, then it's not something where I'm going to say I would have done one thing or I would have done the other thing. I don't say that because if I'm not there, I'm not going to say it. I'll talk about trades other members post in the forum because they post it. It's their trade. So where would the entry be taken? Well, we have something that we teach. It's called the confirming entry. The confirming entry is a fairly simple entry. It's one type of entry that we use. So in the confirming entry, and I'll let this zoom in here just a second. So in the confirming entry, the candle that comes in and breaks the manipulation area is what we term as the reversal candle or the first candle in the setup. So how do we know if the market is going to reverse or if it's just going to continue to the upside? Well, we have to wait for the second candle. So the second candle is what we call the confirming candle. The confirming candle in the case of a short has one very simple criteria. It needs to close clearly below the body of the first candle. So as you can see here, this what we call confirm down. It gave us a confirming candle. So after those two candles close, then we let the third candle open and we take the entry when the third candle pulls back and touches the body of that first candle. The confirming entry, I don't know if I have anything on the site on that. You can go to YouTube and you can type in confirming entry, I believe, and you'll find some information on that. Or I can real quick, and this is just one type of the entry. It is the most, it is probably one of the safer entries. That video is a little bit old, but it's still good. So I put the link in there for the video. Okay, otherwise it can be different. Is a stop run a must? Yes, some type of stop run or manipulation is a must. Yes. Splinter asked that question. For today's attendees, do you offer a discount for sign up? I don't know. Let me think about it. Dean, you asked, do you raise your membership fee this year? Curious to why you charge so much. If you want traders to get this information, do you really appreciate? I do really appreciate that you keep your postings. The reason the price has been raised, guys, is because Chad and I we can't keep up with how many people we're signing up, and whenever we can't keep up with how many people are signing up, we raise the price. The only other option we have is just to very simply stop signups. One thing that we said in the very beginning is we're never going to have too many signups to where we don't take care of our members. Any of our members, one of the things that every one of them will say, I pretty well guarantee it, is that we have hands down the best support out there. If you shoot us an email, you're going to get a response to that email. If you want to talk to us, we're going to talk to you. So because of the level of support that we offer, we can't have, we can't have 200 signups a month. It's just, we just can't deal with it. So what we do is we raise the price to slow things down sometimes. And Dean, I appreciate it. Thanks for the kind words. Karim, thanks for the kind words. Appreciate it. That just represents how wide that box was. Somebody asked, what are the numbers you have on the blocks? The numbers are just, the number below it represents the spread of the Asian session, or the spread of the New York session, meaning the distance from the high to the low. You're asking about the euro yen. We're not going to really talk too much about any specific pair, because what we want to cover here is we want to cover more or less the strategy itself. That way you can apply it to any specific pair. Thanks, Jersey. Appreciate it. Well, if you don't know all the criteria, the cycle is hard to follow. And that's one of the reasons why the daily market reviews are so important, because they give you the cycle every day. And that's something that everybody can learn to do. You don't need the daily market reviews to know cycle. After somebody has learned the strategy and understands it, within 2 weeks to a month, generally they know what I'm going to say in the daily market reviews, because they've become proficient at doing it on their own. So in the beginning, learning cycles is something that they're going to have. It does take a little bit of time, but it's also something that everybody can and does become fairly proficient with. Iman, and hopefully I didn't butcher your name, you said, do you post a video of all your trades giving an explanation why and what manipulation points? What we do, just to kind of reiterate, is that the daily market review is posted around midnight. The reason we post it then is so that everybody during the London session knows exactly what direction they're looking for and the exact points to look for a trade. So that's what we do as far as the explaining exactly why. And I don't just say this direction and these points. I explain it all. And so in answer to your question, that's what we do in relation to doing it beforehand. Okay, somebody's asking, can I type the broker's name in the chat? Understand, I'm not recommending them. I'm simply telling you who I use. Can a retail trader with a 3K account get a broker that does not? Okay, I answered that question. Okay, why do we use candlesticks versus bar charts using candlestick patterns? It's important to understand that the candle pattern specifically is the very last part of what we do. It in and of itself means absolutely nothing. A confirming entry, a single candle pin, a chart pattern means nothing in and of itself. If you don't understand where you're at in the market cycle and what the high probability points are, the candles don't confirm anything. The candles are confirming that we've just seen the manipulation. The daily market reviews, Phil, are for the members, so no. Can you post the initial? We trade the hourly chart to identify cycle and the 15-minute chart to take the entries. Most of what we're going to be looking at is always off the 15-minute chart. Well, it's not really a personal question how profitable I was or wasn't. People watched every single one of my trades for years. So that's also, one of the things when people ask me about track record, my track record was out in front of everybody for years. And was every one of my trades profitable? No. And, one of the things I say is even the best hedge funds in the world have losing quarters. Now, I never had a losing quarter, but it illustrates a point, is that losses among any trader will always happen. And one of the things that, during those years where every single one of my trades was live in front of people, we generally maintained, between, I'd say on average, 2 to 10% per month. Some months were a little bit higher. Some months, in general, on any given year, I would have at least one losing month a year. Last year I had 2 losing months, and I consider a break-even month a losing month. One month was break-even, another was 4% down. So you know, and again, this is all based off 1% risk, but one of the things that, you know, that is also true is every one of those years we far exceeded what most hedge funds do. We were off a very small risk per trade, well in profit at the end of every year. I wish, Hussein. You know, one of the things traders will find out is that I don't care if you've been profitable and you know you're profitable and you've been profitable for years. Every trader will have a mental block. In general, I don't trade over 3 to 5 lots, and it's because I have a mental, you know, for me personally, that's where I'm comfortable. One of the best ways I ever heard it explained was, you know, you may be a great 1 to 3 lot trader, a mediocre 3 to 5 lot trader, and a horrible 5 to 10 lot trader. So everybody has to find their certain comfort level. And, you know, just because you have a certain amount of money in your account doesn't mean you want to trade with, you know, as much leverage as you possibly can. Dean, I appreciate the kind words. Glad you enjoyed it. In general, and this is probably the most important part that somebody can take away, and one of the reasons why people that are tracking the banks have a much higher degree of a higher success rate is because the setups that we look for, because banks have to enter and exit positions over the course of time, once we've identified what the banks are doing, we're not just going to see a 20, 30 pip run. In general, we're going to see a much larger run. So because of that, we always look for at least a 2-to-1 risk reward. We always look for, if we're taking a trade with a 20 pip stop, we are entering, or we are looking for a 40 pip take profit. All right, guys. Well, if you have any questions, feel free and shoot. Otherwise, we'll head out for the day. I've pretty well covered what I want to cover. I want to reiterate, if you guys have any questions about the service or in general about the strategy, you can email or talk with Robin. The cool part about Robin is that he's an actual member, and you know, it's not just me talking about it, but it's a different perspective that might resonate a bit better with people wondering whether they can actually do it or not. One of the biggest things we want to get across to people is that, you know, you can succeed in the market. The market, there's traders that are doing it. We have a lot of proof of that. Now, does it come easy? Does it come without hard work? No, it doesn't. Never. Nothing worthwhile in life comes without a good deal of hard work. Now, in general, we find that people are fairly confused for a week. Things really start to click on the second week, and you have a very good understanding after a month. So once somebody understands what the banks do, and you know, again, it happens, if you're going to put 10 minutes of work in a day, well, it's not going to work. If you're going to put in an hour's worth of work a day, you're going to learn it very quickly. It does not require a huge deal of time to learn. One of the things we find, though, is that after somebody learns what the banks do, the application part is what depends on the individual. Some people will take a little bit longer. Some people will take a shorter time to learn how to apply it. But the application is really the critical part. A lot of people like to blame the broker, Patrick. At the end of the day, the brokers are very simply repeating the price that's already there. So the banks are the ones creating the manipulation. The banks are the one creating the stop run, and everybody blames the broker. You go into any forum, Forex Factory, Forex Peace Army, I don't care what it is, and you're going to see numerous people blaming the broker. If they only understood that the brokers simply repeat the price, and it's actually, for the most part, it's going to be the broker, it's going to be the banks that are creating the manipulation, and it's not the brokers that are simply creating the stop run. It's actually the banks creating the stop run. It is not a guarantee that the cycle will end in 3 days. Sometimes it lasts a little bit longer. In general, as you go through those videos, guys, as you break through as you go through the videos that talk about cycle, one of the things you'll find out is we trade the probability, meaning this is how the market tends to be ran. So this is how it tends to be ran, and we trade the highest probability of how it tends to run. Now it tends to finish around 3 days, but sometimes it'll take a little bit longer. Really, it's not hard for us to diagnose if it's a little bit longer or shorter, though. Well, what I would ask you, Alvin, you're saying, let's say the banks are manipulating the euro dollar. How are you then applying it on cross pairs in this respect? Well, the question I would ask is, why would we try and apply it on a pair that we have to, such as a cross, if it's clear on the euro? So one of the things we try to get people to again, keep this as simple as possible. At the end of the day, once somebody really understands the strategy, they'll understand that it's fairly simple. And what we mean by that is there's only 2 questions we ask ourselves. You need to understand market cycles. So once you do, you're going to ask yourself, where are we at in the direction of the cycle? And the second question you're going to ask yourself is, where are the high probability points? Another way to keep that simple is to trade a select amount of pairs. So what I would say is on the euro, while we do talk about cross correlations in the course, what we urge people to do is we urge people to stick with the majors, especially as they progress and understand the basics. I generally, and in this type of a market more so nowadays, I generally look for 2-to-1 as my exit point. If I see manipulation against the current trade I'm in, then I will look to exit, but otherwise I look for a risk-reward target as my exit. I do not look at support and resistance as my exit point. Alvin, there's many different things we could look at. We can look at volume to give us further indication. We can look at many different things to give us an indication of direction. What we try to do is we try to, for our members, we try to take just what is critical information. Because one thing we've found out over the years of dealing with literally thousands of traders is that if you try and bring things too complicated, even for myself, if you try to involve too many different thoughts, it becomes much more difficult to succeed with it. So we want to ask ourselves 2 questions. Where are we at in the market cycle? Where are the high probability points? And once we can master those 2 facts, we'll have a very good indication of what the banks are doing. Now, again, there's many other things that you could probably use, but our goal is to keep it as simple as possible. Well, if there are, then we don't see the manipulation, and that's the point where we don't get a trading opportunity. Dax, you're asking if there's periods of indecision. That's times where you see what we term as level 3 type accumulation, where you see at the end of a cycle, you'll see an accumulation period where the market is very simply taking stops to both sides of the market. Jersey, it doesn't matter what leverage you have, just make sure that you don't open a position size over 2%. So you could be using 400 to 1 and still trade safely. Just make sure that you keep a very small risk per trade. Like I said before, volume is one of those things that you could use to give you a bit more information. Over the years, one of the things that we found is that it tends to distract traders. So we don't really recommend it. But volume is one of those things that you can add to. It's just simply a confirmation. You still have to ask yourself, where are you at in the market cycle? Where are the high probability points? You could use volume as a final as a final indicator, meaning a final indicator that is actually manipulation of the market. But again, we recommend keeping it simple and looking for very simply in the case of a shorting opportunity, the break above the manipulation and quick rejection back down below. We're gonna head out soon, guys. We've been running for close to 2 hours, so it's probably going to wrap up the seminar. Hopefully, at least we answered 1 or 2 questions that you guys might have had. We like to do a general seminar for members at least once a month or once every month and a half. And so it'd been a while since we'd ran one, so we wanted to do one for you guys. I do not use an MT4 broker. I use MB Trading does have MT4, but I do not use it. Ken, we've been running on 2 hours, and we're probably going to be wrapping up the seminar. What I'll tell everybody, and what I'm going to say here, guys, is pretty important. One of the things that you'll realize with Chad and I, hopefully, and especially, members realize it very quickly, but you guys deal with a lot of, and this is, just to kind of wrap up the seminar, I'll say this. You guys probably deal with a lot of scams in general of people that screw you. Now, we're not right for everybody. We're definitely not right for everybody. And some people may not learn effectively from us. And that's just part of life. Some people don't learn from other people. They just don't seem to jive with the other person. One of the things, and in relation to what you're talking about daily market reviews and how they correspond to the charts. I'm assuming you just want to see how accurate they are. What I would urge people to do is if you have questions about signing up, talk to Robin. He's, like I said, he's a member. He doesn't really have a dog in the fight. So what I'm getting at is you can get some feedback from him. We don't offer a trial because people tend to abuse a trial. But one of the things I always say is if somebody signs up and you find out in a week or two that we're not for you and we very simply are not the service for you, we're happy to give you your money back. Because quite honestly, we put way too much work into our members to deal with somebody who's not willing to put that work back. So that's the way we do a trial. If you don't like it, shoot us an email. Obviously, don't shoot us an email 2 months down the road. But if you don't like it in a month or two, feel free to, or a week or two, feel free to shoot us an email and, we'll give you your money back. But we just don't have the time to work through trials and things like that.